You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 11th day of October, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is private. That's our live training room, and it is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us in about 50 minutes, he'll walk you through. He'll show you on the screen step by step. It's a very simple process. If you do that today, we'll get your desktop set up today. We'll get your indicators indicating today. You'll have the weekend to, kind of get familiar with the indicators. And then your trial will officially start Monday morning at the Wall Street Open. And you'll have all 5 days next week, Monday through Friday, right up until the closing bell of futures at 5 p.m. Friday afternoon. So, for those listening to this broadcast after the fact, never worry about what day of the week or weekend or hour of the day that you sign up for the trial. You'll always get 5 consecutive trading days, even if it stretches over a weekend or even a holiday, or both. Sometimes we have those 3-day weekends. Yeah, that doesn't count against your trial. You still get 5 consecutive trading days. Okay? Very good. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and we come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. This broadcast is open to everyone on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only got to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen? Going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Benefit there is you have access to the question box, so you can ask questions and participate in the discussion. The chat box on our YouTube channel, I'm not able to monitor that until Michael shows up about 50 minutes into the broadcast. So that's the best way. Now, there'll be days you're out of the office, away from the desktop, but you'd still like to join live. Wouldn't that be nice? Or some days you'll be busy and you can't join live. Man, you wish you could catch up later. Wouldn't that be nice? Well, guess what? I tried to do a sound effect and it didn't work. There we go. You can do both of those. It's true. I'm talking about our YouTube channel, which is very easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting. That means broadcasting in two different places at the same time, but you know that. We also archive each and every daily broadcast. Currently, there's over 2,600 daily episodes archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, it's a great way to get to know who we really are. To literally see with your own eyes how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. And there's a minimum 2-hour broadcast every one of those days. Back in the beginning, when YouTube was like a new toy for us, oh my goodness, some days we did 3 hours. There's even some 4-hour broadcasts way back in the way back. But once the shiny wore off, now we've cut it down to 2 hours. But anyway, again, if you're new to CFRN, you can scroll back as much as you want. You're not going to watch them all. Of course, that's not possible. But I promise you, there are millions of teachable moments buried in that library. I mean, if you took 2,600 episodes and it's more than that, and just multiplied that times 2 hours, and there's more than that, wow, that's a lot, right? So anyway, it's nice to know you have that at your fingertips if you ever want to just go back and see. We have members in our audience that have been with us since we began in 2005. They're due a gold watch next April. Guys, with the price of gold, where it is, we may not be able to send you one, but we do thank you for your patronage. So many of you have become literally family members. And that's how we like to think of everyone who becomes a member, part of the family. There's no infighting, no arguing, no backstabbing, no competition. In our discussion group, everybody's on the same page and on the same team. Everyone trying to assist and help each other. So very much unlike all the other discussion groups or chat channels that you've probably experienced in the world of trading, where somebody's always trying to outdo the other person and blah, blah, blah. We have a family-friendly environment. And our experienced traders are always willing to help the new kid on the block. And the good news is even when you're on the trial, you have access to the discussion group, the Logic 247 channel, the concierge trade alerts. You get the weekly trading zones. I mean, when you're on the trial, we treat you just like you were a member for 5 consecutive trading days. No credit card required. We want you to have a clear head so that at the end of 5 days, you can make a well-informed, intelligent decision as to whether or not trading is right for you. And if you're an experienced trader, if what we do is right for you. Okay? All right. This is our daily schedule. Let's dive into our devotional, then a word of prayer, a little bit of news, recap of the alerts. Michael will join us about 50 minutes in for a recap of what happened in the live training room this morning. Then we'll do some live trading on the TradingView platform for about a half an hour. Then I'll wrap it all up with our good word for the day. So let's do it. Now, the topic of the devotion that we're on this week, this is day 3 of 7. What is my purpose? Learning to love God and love others. That's your purpose. Today's scriptures, Psalm 27, verse 4. And I'm sharing from the Message translation. I'm asking God for one thing, only one thing, to live with Him in His house my whole life long. I'll contemplate His beauty. I'll study at His feet. Again, Psalms 27, verse 4. Today we're going to talk about worship. And I got to tell you, worship really freaks a lot of people out. Oh, why would I want to serve a God who has such a big ego that He wants me to worship Him? Or you go into a church and people are lifting their hands up in the air and you just don't get it. But once you get your heart, your mind, and your spirit in the right place, what seemed like a weird thing becomes such a liberating experience. Most people reach a point where you can't keep your hands down. They just automatically go up. Now, it happens in different ways for different people. Some people it's, week one. Some people it's 20 years. It's a sign of when you've completely surrendered everything you are to God. William Blake, the 18th century English poet, once said, "We become what we behold. Take some time to sit and be still, imagining for a few moments what it means to behold the beauty of the Lord in worship and devotion." There are people who try to raise their souls like a man, continually taking standing jumps in the hopes that if he jumps higher every day, a time may come when he will no longer come back, but will go right up to the sky. Thus occupied, he cannot look at the sky. We cannot take a single step towards heaven. It is not in our power to travel in a vertical direction. If, however, we look heavenward for a long time, God comes and takes us up. He raises us easily. Our purpose in loving God starts with simple admiration and worship. The more we seek and behold the beauty of the Lord, the more we draw close to Him and reflect His divine love for us. So ask yourself, what are some of the ways you can look heavenward and worship God today? How does beholding the beauty of the Lord increase your love for God? Now, there's something around today that wasn't around when I was a kid growing up, going to church every Sunday with Granny Reeves, and that's contemporary Christian music. We sang out of the hymnal. I'm not knocking the hymnal. Some of those songs have been around hundreds of years, okay? But it did not stir my soul. I'm just being honest. Now, at the age of 37, which was way back in 1996, the only Christian music I had ever known was singing from the hymn book in church on Sunday morning. But I heard that there was this Christian radio station with contemporary Christian music. I'm like, what is that? It's called K-Love. I'm sure you've heard of K-Love. There's also Air One, their sister station, which is what I listen to now. But I'll never forget the first time I turned on K-Love. I was driving in my little Mercedes convertible. Oh boy, I was driving the car of my dreams. That had been the car I wanted since I was a little boy. And you know what? Once I got it, it took about a week for it to mean nothing. I ended up trading it in for a Vespa, but anyway, that's another story. I had my radio station on this K-Love I'd heard about, and this music came on that sounded like what you would hear on a contemporary radio station. You know, there was actually guitars and drums and all that stuff. The church I grew up in, very legalistic. Only pianos were ordained by God. No drums, no guitars, no thank you. As I began to hear this music, and I don't remember which artist it was, I pulled over to the side of the road and I wept. It was as if something in my spirit was set free. So if you don't know the power of worship, it doesn't have to be K-Love, it doesn't have to be Air One. The good news is the devil no longer has all the good music. If you've watched Elevation on YouTube or your big screen in your living room, they won quite a few Grammys for their work. Hillsong, which has now got, not such a great reputation as it once did. Some bad things happened, but we won't dwell on that. They were one of the forerunners in the contemporary Christian music. What I'm trying to say is if you're down in the dumps, if you just want to feel close to God, find yourself some good contemporary Christian worship music. Pretty soon, your hands will be in the air too. I can't tell you how long it'll take, but I know it'll happen once you've surrendered everything to God. Now, one more thing. Practicing gratitude is one way to seek and behold the beauty of the Lord. Consider all the ways God has blessed, provided, and shown up for you recently. Make a list and display it somewhere you can be reminded of God's love for you, if necessary. I see Brother Miles agrees with me. Thank you, Miles. Join me in a word of prayer, guys. Heavenly Father, one thing we ask you for, one thing we seek, to dwell in your presence all the days of our lives, to gaze upon your beauty, and to find peace in your sanctuary. In times of trouble, remind us that you are our refuge and strength. Help us to seek you above all else, knowing that in your presence we find joy, hope, and security. We continue to pray, Lord, for all those affected by these hurricanes. Bring healing to the injured, comfort to the grieving, and strength to those who have lost everything. We ask that you provide shelter, food, and resources for the displaced, and guide the hands of those providing aid. May your presence be a source of hope as they rebuild their lives, and may they feel your peace even in the midst of all the devastation. We also cry out for your intervention in the Middle East, where violence and suffering continue. Bring peace where there is war, unity where there is division. Protect the innocent, comfort those who have lost loved ones, and guide the leaders towards justice and reconciliation. Let your peace, which surpasses all understanding, guard the hearts of those affected by this conflict. And last on our list today, God, as this presidential election approaches, we seek your wisdom and guidance. Help the nation to choose leaders who reflect your values of truth, justice, and compassion. Protect the election process from corruption and division. Give courage to voters, especially those facing obstacles due to the recent hurricanes, that they may exercise their right to vote. And Lord, we pray that your will be done. And may the outcome be for the good of all people and for the future of this nation, one nation, under God. It's in Jesus' name we believe and pray. Everybody said, amen. Amen. And happy Friday. Everybody's been working for the weekend, and here it is. All right, some news real quick. Consumer Price Index dropped to an annual inflation rate of 2.4% in September, the lowest annual level since February of 2021. Separately, weekly jobless claims surged to 258,000 last week. That's the highest number in 14 months. Possibly the consequence of a chain of hurricanes, labor strikes, and the fact that we have suddenly, in the span of 3.5 years, 20 million newcomers. And every one of them is either looking for a job to support their family or a crime to commit because the government's not giving them enough money, their accommodations aren't good enough. It boggles the mind. So just keep your trust in God, and He'll see us through. Consumer Price Index, a data tool dating back to the 1910s, takes roughly 80,000 price measurements of more than 500 types of goods each month, with the percent change indicating overall price movements. The measure peaked at an annual rate of 9.1% in June of 2022, but has steadily dropped to near the Federal Reserve's target of 2%. The Federal Reserve last month made its first cut to the federal funds rate in 4 years, with more cuts expected. The inflation report is the last before the November 5th presidential election, for which surveys suggest the economy is the most important issue. Honk if you like robotaxis. Tesla CEO Elon Musk unveiled the highly anticipated robotaxi last night, a driverless $30,000 vehicle called the Cybercab. I was pretty blown away at that price point. Tesla says the car, which lacks pedals and steering wheels, will go into production by 2027. So, we're still 3 years out. The company also debuted a 20-person robo-van and touted its Optimus robots. The debut is almost a decade in the making and comes amid a series of lawsuits and investigations over Tesla's supervised driving vehicles, The company's investors hope robotaxis will generate almost 90% of Tesla's value and earnings by 2029. This would involve drivers being able to rent their vehicle through an app when not in use, earning passive income in a part Uber, part Airbnb model. Now that's clever. I just don't know if I want somebody else driving my car, and leaving hamburger bags in it. Tesla hopes electric vehicle sales will eventually account for only 9% of Tesla's value. Tesla is not the first company to pursue this model. Google's Waymo already services 100,000 paid rides per week, including Los Angeles, San Francisco, and Phoenix. Amazon's Zoox, their version, is coming soon to San Francisco. Now, this past Friday night, my son, he and I went out to dinner. It was First Friday, which those of you that have been around know that every Friday night in downtown Phoenix, there's a huge festival with booths and all kinds of bands and live music, and it's quite the deal. We've watched it grow from we were part of it in the beginning it was about maybe 10,000 people back in the late 90s, early 2000s on a First Friday. But now, I bet there was 100,000 people this past Friday night. Anyway, Waymos were everywhere. They're white cars with like this black dome on top, and it says Waymo. And Gabe, my son, we were standing on a street corner, and this car pulls up. And I said, "Hey, Gabe, look, there's no driver in that car." He goes, "Wow." And then two guys got out of the back, just like you get out of an Uber. And I said, "How was it?" And he goes, "It was amazing." So they're here in Phoenix, they're everywhere, and I'm sure they're coming to a town near you. And apparently, they're pretty safe, I guess, so far. Miles asked, so it's fully self-driving? Absolutely. There was not a human being in the driver's seat or the front passenger seat. It simply pulled over to the curb, let its riders out, and the way it pulled into traffic, I mean, there was a car coming, but if I had been behind the steering wheel, I would have thought that there was plenty of time for me to pull out into traffic, without causing any kind of an accident. And it did it perfectly. I mean, it was just amazing. Yeah. Fully self-driving. And you have an app where, just like if you've ever used Uber, you use the Waymo app the same way. It comes, it picks you up, takes you where you want to go, drops you off, and then it gets billed to your account, which is just your credit card. Yeah, pretty amazing. All right, we're running way behind. JP Morgan touts soft landing. Oh, really? Investors pushed the stocks of JP Morgan Chase and Wells Fargo higher today after third quarter results looked better than feared. A demonstration of resilience from the banking giants that points to the possibility of a soft landing for the U.S. economy. And I'll buy it for a moment. One JP Morgan executive was even willing to connect the bank's performance to that soft landing, citing strength on the part of the lender's consumer and corporate customers. An economy that achieves a soft landing is one where inflation slows without causing a recession. Now, you guys all know where I stand on this issue, and I hope I am wrong. I hope you can all laugh and go, "Oh, that Dwayne, he said we were going to have a depression, and we're just flying high." I really do. This is pretty important here. The U.S. Treasury's top economic diplomat on Friday called on the International Monetary Fund and multilateral development banks to work on new ways to provide short-term liquidity support to low and middle income countries to head off debt crises. Jay Shambaugh, the Treasury's Undersecretary for International Finance, told an Atlantic Council event that the Treasury was working with these institutions to find a better path for countries with high but sustainable debts that face liquidity pressures. The plan will require hard work and innovation at the international financial institutions, he said, adding that they will need to design their lending and reform programs in a way that avoids having temporary fiscal adjustments lead to permanent harm due to cuts to important investments, such as for infrastructure. Guys, we already know a central bank is a bad thing. This is a global, that's where we're headed, global central bank. Now, probably if you grew up in a Christian household as a kid, probably heard about the coming someday of one world government, one world money. Yeah, I think we might be pretty close. That really concerns me. I mean, at my age, based on the actuary tables, I'm not going to be around to see the worst of it, most likely, unless Jesus comes back first. But all right, U.S. consumer sentiment slipped in October amid lingering frustration over high prices. University of Michigan's preliminary reading on the overall index of consumer sentiment came in at 68.9 compared to a final reading of 70.1 in September. Economists polled by Reuters had forecast a preliminary reading of 70.8. And we'll stand by while those numbers are readjusted or revised. The bond market is growing less convinced by the day that the Federal Reserve will embark on 2 further interest rate cuts this year. Traders are pricing in roughly 20% odds that the Fed holds rates steady in either November or December. This time last week, even after Friday's blockbuster jobs report, swaps still implied more than 50 basis points of cuts by year-end, likely via consecutive cuts. Treasuries have slumped this week as a result. A Bloomberg gauge of U.S. bonds is poised for a 4th straight week of declines, its worst streak since April. Yields on 10-year notes are back above 4%, and the 30-year bond yield at 4.41% is the highest since July 30. Can you imagine tying up your money for 30 years to get 4% interest? Well, I can't, nor will I. But God bless America. Anybody can do, what's right for them. That's a beautiful thing. Let's hope it stays that way. November 5th, get out there and vote. All right, Logic 247, our 24/7 around-the-clock Emini alert service. We're in week 323, and we've now crossed the 18,000 mark. That's right, over the last 323 weeks, we've issued over 18,000 individual handcrafted alerts. And we've averaged, on a weekly basis, 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. This week, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 55 alerts, still waiting on the outcome of 15. Now, Valerie did the recap this morning at 6:30 a.m., so when she finalizes it for the week this afternoon, some of these will have resolved themselves. In other words, they will have triggered. So she'll be able to either mark them with a thumbs up or a red X. And I've added, I think I added 2 alerts today. So if I don't put anything else out today, that'll push this number to 57. And then she'll reconcile the ones that were still waiting. But at the time she did the recap, we had 40 actionable alerts, of which 4 or 10% would have been stopped out. Again, based on market structure. And that very simple process we teach all of our passport holders in their one-on-one mentoring sessions. I have to say this every day. The purpose of the logic alerts is not for you to trade so you don't have to learn how to trade. I mean, I can't stop you. I can only try to guide you. The purpose of the logic alerts is to teach you to read a chart exactly the way I read a chart, okay? So that you know where you should be entering the market. You know where to expect resistance. You know where to expect support. And the windows of opportunity, they just jump out at you. It's like glow in the dark or something. I mean, once you're able to see them, you can't unsee them. But that's only if you use them as they're intended. Okay? I'm not saying you can't trade them, but understand that's not the purpose of them. Now, so I said the other day, well, gee, with that many alerts and less than 20% stopped out, who wouldn't buy that? And I told that person, I think here live on the show, I said, if that's the reason you want to become a member, you should not become a member. What we want to do is teach you how to trade, but before we can teach you how to trade, we got to teach you how to read a chart. So, again, I can't make anybody do anything, but I can caution you, don't make the mistake of not using the alerts to learn how to read a chart. In fact, at the end of the broadcast yesterday, we did an alert live in real time, and I don't even remember, I don't know if that got a thumbs up or an X. Maybe somebody in the audience does. I'll check it later if I can. Miles, so are these more for swing trades? Okay. No. Let me show you. Last week, we had a total of 43 alerts issued, 7 of it triggered, 36 actionable alerts, of which 4 or 11% would have been stopped out. The first logic alert coming out of the gate Sunday night when the markets opened. Now this says 3:18 because I'm on the West Coast. If you're on the East Coast, it says 6:18. Why? Because Telegram reads the clock on your computer. So whatever time zone you're in, that's what's going to show up here. Okay? So the markets opened at 6 p.m. Eastern, Sunday night. But this alert didn't trigger and fill until, was it Wednesday? Maybe it was Wednesday? Yeah. Okay. So B is buy, 58.12. The ES, you buy at 58.12. Your initial target is 58.14. That's your goal for the day. Then, looking at the chart, I could see there was potential resistance at 58.24. So that becomes target number 2, potential resistance. And then the final trade to target is always the weekly trading zone above on a long and the weekly trading zone below on a short. On Sunday night, the alerts that go out are based on the previous week zones because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. Any alert that goes out after 6:15 a.m. Eastern Monday morning, those are all based on the new weekly zones. So the ES went about 3 days before it finally triggered. The Dow, this Russell, it may have triggered now. I can't pull up my chart right at the moment, but, well, maybe I can. Maybe I can. Maybe I can do the unheard of. Let's see. The Russell has made it up to the zone at 22.44. Okay, so let's go back here. So when Valerie does the recap today, she's going to mark this one, put a thumbs up, okay? B is buy, S is sell. Crude oil, sell 73.10. Initial target, $73. That's your goal for the day. Then as I read the chart, I look left and I see that the next potential support is at 72.70. Below that, the next potential support is 72.60. And then there's the weekly zone, okay? So I don't think you would call these swing trades, even though it took like 3 days for these to end up triggering. Once I look at the structure of the market and publish the logic alerts, they remain valid opportunities until triggered. So any of the ones that don't trigger this week, they're still valid next week and the next week till they do trigger. Even if it's a year from now, it's valid until triggered. So this all happened Sunday night, okay? This is just Sunday night. This one is probably not going to happen. Then we roll into Monday. Here's a short on the ES. Sell 57.44, initial target 57.42. Now the maximum that you risk on a logic alert is $300 per contract per trade. But that's only if there's that much potential profit, okay? So from 44 to 22, there's 22 points of profit. So do you risk $300? That depends. Are you going to stay in the trade to see if it makes it all the way here? Or are you going to jump out here with your goal for the day? If you're going to jump out here with your goal for the day, if that's your plan, then you never risk more than the potential profit in a trade. So if you're looking to make 2 points, $100, you cannot risk more than 2 points, $100. That's bad math, bad science. You know, there's people out there with systems and they'll teach you how you can risk 10 points to make 2 points. Yeah, that'll work fine for a while. And then you'll get kneecapped 3, 4, 5 times in a row. And then you're back to working at the factory. Okay. NQ. This is the actual number of the alert. This is alert number 17,984. Okay. At the time Valerie did this particular recap, price had dropped to 19.90. 902.50. So right between these two. Once she recaps it, she doesn't go back because it continued to drop further. But you can go look at it on your own chart. Okay. And as a member, you have access to every alert that's ever been issued and what happened to it. They actually become part of the public domain once the week's finished. Now, a hedge means that the market's in a position, okay, when I was doing the alerts, price could go higher or it could go lower. So I put out a long alert by 22.19, initial target 22.21, goal for the day, then the final trade to target. But the market structure was such that price could also drop, and it did. 22.11, sell, initial target 22.09, weekly trading zone 22.05/06. Okay. Reminder, all alerts remain valid opportunities until triggered. There's a short on the Russell, long on the NQ. Okay, now here's an example. Okay, on this one, from the entry at 23.11 to the final trade to target at 23.21, that's 10 points in the NQ. That's $200 per contract traded. So in this case, the maximum you would risk is $200 per contract traded. On all the other markets, the initial target is designed to get your goal for the day, $100 per contract traded. But because the NQ is so volatile, it's $200. Okay. Here's a crude that hasn't been designated yet. This was a buy on the Russell, buy on the ES. So you buy 58.17. At 58.19, you got your goal for the day. Potential resistance, 58.22. That's, for me, looking left, seeing where the next resistance should be. Target 2, target 3, final trade to target. At the time Valerie did the recap, price had already made it to 58.43.75. So from 58.17 to 58.43, if you care to do the math, that's how many points that this gave at the time she did the recap. But price is traded even above that. Okay. So again, if you take the alerts and study them and do this, let's say you like to trade the ES. So this alert comes out. Draw a horizontal line on your chart at 58.17. On your 30-minute chart. All alerts are created on a 30-minute chart. Then draw a horizontal line at 58.19. Then draw a horizontal line at 58.22. And then at 28. And of course, you've already got the weekly zone on your chart. If you repeat that process over and over, pretty soon it will become crystal clear why this was the entry. This initial target is simply because I want to give you a chance to get your goal for the day. But as you look left, you'll go, oh, okay. I can see why he thought there might be potential resistance at that level. And at that level. And then he hit the zone. This one here, it was in process at the close. But if you held it to the next session, it ran all the way to the zone to the target. This is that one we were talking about. It was issued Sunday night and finally triggered today. What day did I update that? Wednesday. Yeah. So in that case, I guess you could label it a swing trade. But usually they'll trigger in the same day or at least by the next day in most cases. Sell the Russell at 22.11, initial target 22.09, Next target, 2207. And that's from looking left. And I'll show you when we go to the charts. And then the zone's the final trade to target. And when one stops out, there wasn't a valid entry as we teach. And so it gets a red X. Wasn't really because it stopped out, it's just there wasn't a valid entry. So, and this is all still this week. And I think this was the one I put on live yesterday on the broadcast. Now I could be wrong, but I know it was a short. I'm pretty sure it was the ES. So 58.23, initial target 58.21, potential support 58.19, and then the weekly trading zone. Let's see, what day is this? Does this say Thursday? Yep, Thursday. Okay. So if you go to the yesterday's broadcast on YouTube, youtube.com/CFRN, and go to yesterday's broadcast and just fast forward all the way to the end, right before I do the good word for the day. We did this live in front of everybody, and I walked everybody through it. And for all of you that are new, and even if you're not new, if you've just never really understood the logic alerts, book a mentoring session and let me walk you through the process, okay? Then we had a long on the ES that got stopped out. Then we had a short on the ES that got stopped out. And then here's a short on the Russell, a short on the NQ. Now again, Valerie did this recap that I just showed you at 6:30 this morning. And the two alerts I put out today were these two here. It was a hedge. Where crude was positioned, it could easily have popped up or dropped like a rock. That's the difference. And so, whichever comes first, and as you saw before, sometimes you'll get both of them. Price will run up and do what it's got to do, hit the zone, reverse, come back down, then trigger this one. Okay. All right. Now, did that help, Miles? The full profit target is if it goes all the way to the zone. Yes. But you've got to make a decision when you enter the trade. If you're going to get out at the initial target, then that's all you can risk. If you plan to stick around to the second target as you learn to read market structure, then that's the maximum you risk. But you never risk more than $300 per contract per trade, even if there's $3,000 of profit in an alert. And often there is. From the entry to the zone, especially in things like silver.
Yeah, especially with silver.
Yeah, but you don't risk, even though the alert itself has $3,000 of potential profit. If you know you're going to jump out with your $100, then you should risk $100. Anything else is bad math, bad science. So anyway, Michael, you can see we're running way behind today, but
That's okay.
Miles had a question about were the illogical or swing trades. So I just wanted to make sure he had a good understanding. What is GCLX? That's crude oil. Gold is GGCZ on the DT Pro platform. On
I'll show you that in a minute.
Yeah. So anyway, Michael, you can go ahead and take the screens. Guys,
Okay.
I will do everything I always do every day. We'll go over the CTAs. We'll look at the big picture, the daily chart, everything we always do. But I know Miles is new with us, and I want to make sure he gets a good understanding of it from the beginning. Because if we practice bad habits, we're going to get really good at doing things the wrong way. So I want to get you off on the right start.
All right. And let me just start off by saying this stuff about gold and crude oil. If you're going to trade gold and crude, you don't have to change any of the stuff you have going on. Let me take the MA one off for a second. I don't know why I had this yesterday. You don't have to change anything in here, right? Except the time frame. I would go to like a 9 range on that. You could do a 19 range because it's base 10, but you're not going to get that many trade opportunities because they're not that volatile usually. But if you go to like a 9 range with a gold or crude, and there's no G in front of it with trading view, you just do CL, would be crude oil. Okay, and if you go to the 1 exclamation point, that is the leading contract. All right, it's the current contract.
Which just so happens to be the X right now. That's why it said GCLX on DT Pro.
Yep. And that's why it's right down here. CLX is the leading contract. Okay, so I just choose that, and you leave everything the way that it was. You don't have to change a thing as far as the indicators go, and it's all the same stuff.
We trade every market exactly the same.
Yep. Ribbon is the same right here. You're looking for it to pull out of the oversold. Bang. Ribbon is the same. You're looking for it to pull out of the sold. Bang. Out of oversold. Again, it didn't put it in a higher swing, so you skip those two. Then you get all the way over here, and the ribbon's not right. It turns around, starts going down. Right here's your first one. Didn't put in a lower swing, so you skip all the way over to here. And that one didn't put in a lower swing. It gave profit, but it didn't put in a lower swing. Now remember, if you're just trying to get the gold for the day, the crude and the gold is $10 a tick per contract. All right, it's $10 a tick. So you only need 10 ticks out of this. It's 35. This one here went 35 down to 20, so it's 15 ticks. It's $150 a contract. That's your goal for the day, 1.5 times.
And again, when I go through the CTAs and the logic alerts, and we see these huge moves, I'm not encouraging you to chase the huge moves. I just want you to get your goal for the day and put the mouse away. But I'm trying to help you understand how price flows across all markets and all time frames. That's why I do that. I'm not encouraging you. What you learn in the live training room every morning, that model works. And if you follow the 24/20 blueprint and you make sure you ask lots of questions, and because the methodology has gotten so simple, a couple weeks you probably run out of questions. But we're always available to answer your questions. So I'm going to hit mute. Your charts look good.
Okay. All right. And this is what the crude looks like. The gold, just do GC. Okay, it's the same stuff for gold. You would leave it the same time frame because it's base 10 as well. And go to the leading contract. I think right now we're on the Z contract in gold. But go to the leading contract, which is the 1 exclamation point, and it's the same thing. It's also $10 a tick, so you need 10 ticks to make your goal for the day. And pretty much any one of these things that came out of the oversold right here where the ribbon was spread would give you your goal for the day.
We are in Z, you were correct.
Yeah, that's what I thought. But like this one right here gave 10 ticks. This one right here probably gave 10 ticks. 74.7 up to 75.8 gave 11 ticks. This one right here gave at least 10.
And you only need one of those a day.
Right. You only need one a day. So anywhere in there, you could have gotten your goal for the day. The gold and the crude, another question you might have is, well, when are they most, when is the best time to trade any market? That might be a question you have. And all you have to do is put on like a 1 minute. Well, first put on a volume indicator down here at the bottom. Okay. Put on this volume guy right here. Right, put it down there at the bottom and go to like a 1 minute chart or a 5 minute chart or something like that. Depending what time frame you're planning on trading in, 1 or 2 or 5 minute chart. Just go to a 2 minute chart, and you can see during the day where the majority of the volume is. If you get one screen right, it has the morning session. This is gold. Okay, so it has the whole morning session right here. You can see what time the majority of the volume is. Right in here is majority of the volume. And then right in here, and right before the European markets closed, right here there was a bunch of volume. Now that's today. If you do it on a 30-minute chart, you'll be able to see it a little more clearer in here, where the volume is, the big spikes, right there, that candle, and these candles right here at the open. Okay, and if you go back to like yesterday, make sure it's the same thing. This is today, right? Today is the 11th. Yeah, we'll go back to yesterday on the 10th. So right here, the candle at the open, that was actually when the news came out yesterday. So that's, and when the news comes out, of course, it's going to be an anomaly. But right here, that one, and then the candles right here, these two candles right before the European close. Okay, it's pretty much the same thing every day. This candle, and then the candle before the European close, right here, the 11 o'clock candle. That's where the meat of the volume is. Okay, and you can see it tapers off after that. And you can do that for anything that you want to look at. All right. You said, for example, the alert shows a short at 75.10. Now right now it's at 75.26.
Yeah, I just answered him. I told him that was correct,
okay.
And that's a crude
Okay,
that he's looking at. Yep.
Yeah. Okay.
See, you're getting the hang of it already.
But I wanted to point this out because I don't point this out probably often enough. If you want to know, for new people anyway, if you want to know where the volume is, just go to like a 5-minute or a 30-minute or some minute time frame. That does have a time element associated with it. Okay. And that's really the minute ones. The minute ones are the only ones that have a time element associated with them. Go to something that's got a time element associated with it and see where the volume is. Just put the volume indicator down there and you can see exactly where the volume is. And that's where you want to be trading. I mean, you can trade in the other ones. It's just you're not going to have a lot of volatility.
And keep in mind that I create all the alerts on the 30-minute chart. That's my roadmap chart. But once you see the window of opportunity on your 30-minute, that's when you dive down to your 7-tick range or your 19 or your 31 and actually execute the trade based upon the window of opportunity that you see in the larger time frame. So book a mentoring session next week or a couple, and I'll be happy to go into it into great detail with you, okay?
And though I don't do this myself, one thing that you can do that I know other people do is if you put multiple contracts on at the entry point with the Logic 247 alert, whatever you're basing your entry point on, you could take off a contract, move the stop to break even, and take off a contract at the initial target of 2 points or the equivalent of 2 points, $100 a contract, and let the other one run. And then you can use those larger time frames, the weekly trading zones and everything else that you get, the potential support, potential resistance areas that are beyond the original target as areas for an exit.
He said doo-doo.
I didn't see that. Did he? All right. Potty words. All right. Let's put this back to the Russell, and I'll jump into what I have to actually do. What I came here to do today. Did I do any of the stuff yet? Did I go into this, or did I just jump right into everything with you?
Anything yet?
Okay.
So now you're behind like I was behind.
That's okay. It's all good. It's a good day. I mean, the trading wasn't easy this morning, but it was simple. We don't have that saying on here anymore. We used to have that saying, trading's not easy, but it can be simple. Anyway, let's get into it. Good afternoon, everyone. Today is Friday, the 11th day of the 11th day of October. Gosh, after my birthday, and we'd have a new president. I know that's going to be the case. 1 month from now, we're going to have a new president, God willing. Be the one we want. Anyway, today is the 11th day of October, 2024. If you've not taken a free trial with us, go ahead to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. When you click that, you're going to be brought to not this registration page, but this. I think I hope I hit the refresh button. Yeah, okay. This registration page has all the stuff for next week in it. And all we ask for is your name, your email, your phone number right here. All these drop downs, fill out the multiple choice questions. If you're going to use NinjaTrader for your charts, give us your machine ID. If you're not using the NinjaTrader charts, then we don't need your machine ID. Give us your trading view login ID. We want to make sure you get that. Get one of those and give it to us. All right. It's simple enough to get. If you don't have one, go here to mytradingiq.com, click on trading platforms. You know what I'm thinking, Dwayne? I might do. Just watch this video right here. I might go to the registration form and put that right down here. Say, click on this to get your trading view charts. That might be a thing to do. I don't know if I can. I don't know if they'll let me do it, but I'll see if I can. Anyway, get the register button.
Say that again. I had looked away for a minute. You're thinking about doing what?
I was thinking right down here where it says optional if you use TradingView, please provide username and all that. Putting the link right down here that they can just click to go straight to the video to get TradingView, rather than having to jump back to the page on the website.
I don't know if it'll show up clickable or not, but we can try it.
Yeah, that's what I was thinking.
If you put in the HTTPS, it very well might show up as a clickable.
Because that would, really, this, not really, I'm going to put not really optional here. because we really do want you to get TradingView. But anyway, give us that information, and once you do, we can enable your indicators.
Or maybe add a box that says if you don't use TradingView, then click this link so that you can take the free trial or whatever. TradingView.
Yeah, I'll see what it lets us do.
Okay.
If I remember right, it's pretty limited in what it lets us do. It's this is all coming out of a multiple choice box to begin with, I think.
Right.
I'm pretty sure it's really limited. But anyway, do that, and then we'll know you took the trial, and we'll be able to enable the indicators for you, so you can start your trial with the indicators indicating on your desktop.
Yeah, because you don't want to go through get halfway through the trial and then decide to get your indicators turned on. You want to be ready to hit the ground running.
Yes, that is the backwards way to do it.
And Friday is the best possible day to sign up for the trial, because you'll have 2 days, Saturday and Sunday, to get familiar with the indicators, and then your trial will officially start Monday, and then you get 5 full days next week. So I just turned a 5-day trial into a 7-day trial.
There you go.
If you sign up today.
Yes. And Miles, that last comment you made, you got to make sure that everybody out there where you live has that sentiment, because you are in one of the swing states. I am too. All right. So today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We were back and forth quite a bit today. We're actually down like $295 a contract at one point. And we went all the way back up to 435, and we stopped out on our last couple of trades. But we got one positive trade on the NQ right at the very end. But we ended up plus 150. So the way it all came together, we got 8 ticks on the NQ, 4 ticks on the Russell, 33 ticks on the YM, and minus 6 on the ES. Now, I think the Russell, I guess the Russell and the YM, we weren't minus on the Russell or the YM at all at any point today. But the NQ and the ES we were back and forth on. And today it took 47 minutes and 11 trades to get to the goal for the day. At that point, we're up $170 a contract, or $1,700 with 10 contracts on. And we took a total of 21 trades. So on a month now, we're at $7,502 over 9 business days, averaging $833 per contract per 2-hour business day. Now, we still have a couple weeks left, right? We have 9 trading days left. 9 trading days, 7. Yeah, I don't know. The way we started off the month, it was looking like it was going to be an easy path to our new highest or best month ever. But then we had a few days in here where we struggled a little bit. And it's not that we struggled a little bit getting the goal for the day. I guess we did. So far this week, we had 5 days this week, and we struggled getting the goal on 3 out of the 5 days, it looks like. I don't know if I was off this week or something, but this one took 2 trades in 18 minutes. This one took 9 trades in 24 minutes and 11 trades in 47 minutes. Now that's because we stopped out on both of the first trades that we took, or before we had any profit, we stopped out. We had a little recovering to do, but this one I made a mistake yesterday. And I think I made a mistake that day too. I could have had on the first trade on both the days. Anyway, we are at $7,502 per contract, averaging $833 per day so far on the morning session in the month of October, and $93,640, averaging $487 on the year. On the 24/20 blueprint, this number went down a little from yesterday. So far this year, we worked 55.9 hours getting the goal for the day, And that puts us at an average of $2,658 per hour, right? Trading 10 contracts now because we're in the 10th month. Go to 11 and 12 as the next couple of months come up. All right, so let's get into the actual trades. Now, we ended the morning session with a trade we were waiting to see trigger here on the YM. It was right here, and it never did actually trigger. Did it? Was it right here? No, it was back here. It did actually trigger. It was this one right here, right? But this is the bar we were waiting on. This one right here, the bar we were waiting on. And this bar didn't open until 11:27. So we did the spreadsheet before we got to this bar. If we would have left the order on there, if we would have stuck with it, we would have had a nice win on that bar. But as it was with the YM, we had this trade right here, which was a plus 10. Then we had another one that was a plus 21. I'm not exactly sure. Then we had another one that was a plus 2 somewhere. It doesn't look like I wrote down the plus 2. I think this was a plus 2 right here. Or that was the one at the end. That wasn't the plus 2. We had another one somewhere that was a plus 2. And that was it for us for the morning. Right? Plus 2 might have been right in here. Anyway, that was it for us for the morning session. During the break, it looks like there was one trade right here, a short right here. Now, did it go 10 ticks in a profit? If you had the exact entry at 8, it dropped down to 98. So it did go 10 ticks if you had the exact entry. Now, if you had the exact entry at 8, how far back did it pull? To 32. So it wouldn't have stopped you out. It would have come one tick away from stopping you out. So it did end up going down, but it would have been a hairy trade either way. You came really close to stopping you out. If you got the exact entry, it wouldn't have stopped you out. And it would have gone to the point where you would have gotten your stop to break even if you got the exact right entry. But if you were off by one tick, you wouldn't have gotten the break even and you would have stopped out. If you went tick the other way, you wouldn't have stopped out and you would have had the whole thing. So it's kind of one of those trades. The perfect entry would have kept you in it. And a slip of a tick in the bad direction would have gotten you stopped out. And a slip of tick in the right direction would have got you the whole thing. All right. Anyway, that was the YM. We ended with a plus 33 on the YM. And the Russell, this is on a 9 range. We go back to the 19 range, which is what we were working with. We started out here on the Russell. This was a great trade. This is where we almost got the goal for the day. I wish we would have, but we were off by just 8 ticks on this one. We picked up 29 ticks on that trade right there. And we had already stopped out on the ES. That's why we needed a little bit more than the 29 ticks there to get it back. And here we had a stop out that put us back down to 4. And then we had a break even, and then we had a plus 20. That got us to 24 on the Russell for the day. There was one more trade here at the end of the session during the break that went into the zone, and then it pulled back and went sideways. So the Russell's not really giving up anything right now. Now I know what's 14 trading days? Is it 14 trading days left of the month? That's what you're at. That's what you're talking about, right? Oh, I guess it is 5, 10. Yeah, 14. Sorry, I totally skipped the whole week in there. Oh, so we could definitely do that, Michael. You are right. We have 14 trading days. So if we run the average right now, our daily average of 800, if we run that out on the month, we'll easily make a new monthly high. I was wondering why. Man, my brain is just off today for some reason. I don't know why. Anyway, the ES. Now the ES, we're back and forth on the ES. Yeah, it is. And the kids actually have vacation this weekend. It's their fall break. They get Monday and Tuesday off. And for me, that means Jake's staying up in the mountains at App State for an extra 2 days this weekend, probably. And Jada was FaceTiming Macy as this meeting started, so I don't know if she's planning on coming back. Ruining our nice long weekend. Just all right. All right, so on the ES, our reverse trade was a stop out. We were minus 10. And the next one we had a break even. And the one after that, we had 14 ticks. That got us to plus 4. Oh, I'm sorry. The one after that, we had plus 10 ticks. That got us to even. Then the one after that, we had plus 4. That got us, well, to 4. Then we had another break even. And then at the end of the session here, toward the end of the session right there, we stopped out minus 10. So that got us to minus 6 overall on the ES. And let's see, during the break, there was one trade right here. That was a nice trade. And there was one trade right here. That was also a nice trade. 2 good trades during the break on the ES. Now, I'm going to say this just because it needs to be said. If you don't know this, if you're new, then you probably don't know. For 10 years, we traded on a 4-tick range on the ES. And if you go here to trading platforms and you go to the trade rules page, I have a 4-tick range thing right there. I didn't do that last night. I wrote the note to myself and I didn't do it last night. Pardon me. Sorry, I didn't make the update on that I was going to make. But we have the 4 range here. There's an 8 stop, trails to break even after 4 ticks in profit. If you're not having any trades, if you're just not producing any trades with the 7 range on the ES, you can always go down to the 4 range. There's likely to be some pretty good trades down there on the 4 range, right? The spreadsheet that we have, for those of you guys that don't know this, the spreadsheet that we have starting in 2013 up to 2022, we're using the 4 range on the ES. Okay. 2022, I believe, is when we started using the 7 range on the ES. So you understand. So crude just triggered the 75.10 to 75, right? I don't know. I don't have a crude chart, not even on my other one, but let's just go look at crude. If the alert was to short, crude is, I'm just going to use this one. If the alert was to short 75.10, then it would have just triggered going through it right here. Was the alert to short 75.10? You said 75.10 down to 75. So you'd have to drop down below it to trigger it. So it would have triggered back here a few minutes ago. Yeah. Would have triggered back here a few minutes ago with 75.10. And the target was here at 75. So it did hit the target already. Went from 75.10 right to there. Okay, let me crunch this up and see if I can see a little bit more. So this is where it went down to. It hit this level right up. I'm going to put one more thing on here right now so you guys can see the NA1 BBC cross that happens in here. Now, this is on a 4 range. I'm not going to do this on a 4 range. Let's do this on a 9 range, like I would look at crude oil. We'll do it on a 9 range, like I would actually look at crude. Now, the initial trigger was at 75.10, and it did go straight to 75, so you would have gotten the initial target right away on that. You probably would have gotten it all in one bar.
YouTube can hear this too. This is really important for the logic alert. Important prices, important areas are almost always tested. So in the live training room, you're taught to get your goal, get out, be done. And you could have done that right there. But price will almost always revisit the entry point. So
that's when it comes back down right now.
So, and then it'll next time down, it'll probably hit that next target, which would
probably be down here.
74.80. That's the next potential target. Yep, right there.
Right there.
See, that's market structure, guys. It's right there, right in front of your eyes.
And while we're looking at this and talking about this, this is a good opportunity to show you one other thing that you get when you're looking at the Logic 247. Those are not just areas to enter. They're areas that prices is likely to test. They're important areas. Important areas are always tested. So right here, we got to bounce off the ribbon right here that came out of the overbought. That is going to go down to this level.
And you can take the same trade again.
Yep.
Most logic alerts will trigger multiple times.
Yep. So this right here would have been the normal trigger for us from, if you're using what we do on a 9 range, you would have your trigger right here. It's not so much off the ribbon, but it's the pull out of the overbought right here that triggered you into that. But that should go down here to that, and then to the prior swing low, and then beyond that to the next level down. And using everything that we went over this week, this has just turned into a whole lesson. Using everything that we went over this week. Remember the leg lengths, right? So here's our leg length. And I bet you that drops us right down at that 80 level. Once I apply it to the high over here. Look at that. How is that symmetry?
I believe the term is boom shakalaka.
You see how it all comes together? The symmetry is there in the market. The same things happen again and again and again.
And you're right. The word was geometry yesterday. I don't know why my head was stuck on that's the wrong word.
But that is what it is. And
see, when I look at a chart, I see a masterpiece. You know, I see charts that I would frame and hang on my wall. And to other people, it just looks like chaos and nonsense. That's because I put in the time and did the work, learned to understand how price flows the same across all markets and all time frames. And as Michael was trading long before I was.
This is, again, you see the same thing from there to there, and now it should be to here. Okay, that's just the way the markets work over and over. All right, so where was I? I think I was done showing. I didn't get to the NQ yet. Let me get to the NQ. I keep jumping down these rabbit holes.
I'm in no hurry, okay. So you take as much time as you need, and
well, the markets are kind of crappy right now anyway, so it's good to do some good explaining.
Okay.
Explaining. I must have mixed up two words. I'm a wordsmith today. All right, so let's get the NQ stuff. We'll cover that, and we're back and forth on the NQ today too. This is why it took so long to get the goal for the day, because this guy right here. All right, we're so close on this one, so close. But here, our first trade of the day on the NQ, we had, we don't even show it. Our first trade of the day on the NQ here, we had a break even. Then we had a +8. Then we had a +20. Why is this not looking anything like what I have down here? All right, we had a +8. We had a break even. Then we had a +8. Then, okay, this is a minus. All right, so this was the +8, and this was the -36. That's a -20. I made that mistake this morning too. That's a -28. Okay, then we had a break even there. Then we had a +48 there that got us up to 20. So this, I had 3 trades on when this happened. I had this one, I had the Russell, and I had a YM trade all at the same time, I think. Right? And I think all 3 of them made money all at the same time. And that's where I got the goal for the day. This trade here got us to +20. And then the next trade, this was a 16 tick trade, got us to 36. Then we stopped out on this one right before the end of the session. This one and ES, we stopped out on both of those. Right? I had both those trades going at the same time, and they both stopped out. So that brought us back down to 0 on the NQ, and then we had this one +8 right at the end. During the break, it was going into the zone, so you couldn't really mess with that. Came over here, there was a trade right here that would have just about stopped me out. Depends where you got filled. Okay, it would have given a break even if it didn't stop you out. Then it flipped around and the zone was in the way again. You could have taken this trade, and this again, depending on where you got filled, would have been really close to stopping you out. And you get over here, this would have stopped out. It was just a rough day today. I said that in the morning when I had like 3 stop outs at the beginning. I said to everyone, if I'm having a hard time, then you guys are probably going to have a much harder time. So do not trade yet. And some people heeded my warning, and some people did not. And I wanted to wait until all this started to happen. Once all that started to happen, it got pretty easy for a little while. And we went from minus 200 and something to plus 400 and something in like a very short amount of time. So anyway, all that to say this, we ended the NQ with plus 8 ticks. It was not a great day on the NQ today. All right. Part of me wants to look at the crude oil. Actually, you know what I want to look at right now is the soybeans. What is soybeans on TradingView? I know it's ZS usually. Soybean futures, it is ZS. And this is the leading contract on soybeans because we had the WASD came out today. And usually the soybeans, when the WASD, now soybeans is base, it's a 4 ticks to a point, we'll say. It's based on quarters, just like the ESs and everything else. You got to do things at multiple of 4 minus 1 is the same, is the kind of time frame you should use for the soybeans. And so I guess a 15 range is pretty big. So a multiple of 4 minus 1, we'll do a 7 range on this. That ought to work. So WASD came out today. It didn't really have, I mean, prices went down. They were completely sideways going into it. And they went down from it. So the soybeans is 1250 a tick, just like the ES. Just in case you don't know, it's 1250 a tick, just like the ES. And right here was the first opportunity on this down close. And that would have been at 13.6. And it dropped down to 10.4. That is 6 ticks, I think. No, it's actually more than that. No, because these are 7 tick range bars. It's 10 ticks. 10 ticks is what it is, I think. And this one right here dropped down from 13.0 all the way down here. Those are both nice moves right there. Enough to get your goal for the day. Each one of those was enough to get your goal for the day. This last one right here was a huge move on the soybeans, and it's pulled back again. So what we do is, it's good on all markets. It works on all markets, on all time frames, but it's best to choose a time frame that makes it easier for you to do stuff. And of course, I like range bars. I prefer range bars over anything else. But you can see it's just about to set up another trade right here. I would not do this at this time of the day on a Friday on soybeans. They actually close in 32 minutes, I think. But that is what they looked like today. The WASD came out. So I'm kind of curious what wheat looked like, because all the grains should have a move today at noon. Right, so the wheat didn't really give any trade indications in here. I guess you had this one right here, right there for that leg down. But what was this? I think this was the Russell, right? It's the Z contract on the Russell. Was it the Russell? No, it wasn't. It was the NQ. All right. Well, I guess I ran out my whole time. And we didn't get to put a trade on, but we did get to talk about some stuff. So that was good. And the markets aren't really conducive to trading right now anyway. So I don't mind that we used up that time looking at other stuff. It was not easy trading today. I'll say that. Once we got the goal for the day, it's definitely one of those days where you want to quit. During the break here on the NQ, we had, I just went through all that. And the ES, same thing. All right. Well, it's just about time for me to wrap it up anyway. So with that, I will say, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, sign up for the free trial right here. Click on the purple button. There's no credit card required for the trial. Just sign up there. And it's going to bring you to this registration page where all we ask for is your name, your email, your phone number. Fill out the multiple choice questions. If you have Ninja, give us your machine ID. If you have TradingView, give us the login ID. You know what I am going to do right now is go and change this page right now. Not that one, this one. And put the full bracket in there. All right. That is it, guys. With that, I'm going to wrap it up, and I'll pass it back up to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay, you might not be ready, and that's okay. We really don't have any trades here right now, but if anybody wants to go look at any other grain markets, because I'm curious now. I want to show you those of you guys who are in here who, let me turn on the paper trading thing down here. And I want to show you this. Go to ZS and we'll do the soybeans. Now we're going to have to choose the right contract. I think it's this one. And we'll do Shift D. What I want you to see is over here how it goes per tick. It goes, each tick is $12.50, and there's 4 ticks to a point, we'll call it. There's 4 ticks to a point. So to go from 7 to 8, it's got to go 1, 2, 3, 4 ticks. It's got to go up 1, 2, 3, 4 ticks to go from 7 to 8. So it's $50 per cent is what it is. Any thoughts on Ethereum? Let me go look at that. I wanted to just show you this, Miles, and anybody else that's brand new to it, just so you understand that's what it needs work. But let's go over here to the cryptos. I haven't looked at that one in a while. Let's see. ETH. Did you want to look at it on a daily, or how did you want to look at it? Because right now on a daily, you have lower highs and higher lows. It's going sideways. It's sort of a breakout spot, and you don't know this, but I just leaned back and kind of looked at it out of the corner of my eye, and see, we had this triangle back here. This was, wow. This was a while ago when I was drawing this in here, and I was saying when it breaks out to the, whatever side it breaks out on is the side it's likely to go down on and stay in, and it broke out to the downside. We have the same thing going on right here, right now, right? If I could almost even take this trend line right here, and if I clone it, and I can just about use that same trend line just right here. If I extend it, okay, the bottoms are not as steep as this was. So if I clone this one and we take that guy, we stick it over here, it's not quite as steep, but you can see what I'm getting at here. It's going to break out one way or another. And when it does break out, it's likely to have the same pattern again. Okay, so it's not looking real bullish right here, really, to me. And this is on the daily chart. Now, did you want? Yeah, you want to look at it on the daily. This is on the daily chart, so it's not looking real bullish. It's not looking like anything I'd want to get involved in either. It could go either way, but if it breaks out to the bottom, it should do probably the same thing. Break out to the bottom, make a pretty quick move down. Then over like a month, pull back up. Maybe a half a month, pull back up, and then make another big leg down. In the scheme of things, in the bigger picture, if we could do more than a day, like I don't know if I can. I think I can. Let me add custom interval. Let's do 2 days. I'll add that one on there. Okay. 2 days.
Did you call me yet?
No. I did, but then the question came in, so I just wanted to cover the question. In the scheme of things,
I was talking to my wife, and I completely lost track of time.
That's all right. In the scheme of things, you can see it better here, right? Where we had the move down, 50% retracement, move down. This retracement is just about 50%. It hit 50% there, and then it pushed down again, didn't put in a lower swing, and it's trying to do it again right now. So if it does not put in a lower swing here, if over the next, let's say, month, if next month we're still looking at this being the low, then that would be kind of bullish from a daily perspective, okay, because it didn't finish the trend down. So then what you'd expect is it would turn around and start making legs up, right? So the leg up would be a minimum of this size right here, right, from here to here. So you would expect, if this is the bottom, you would expect a leg up that's going to be this big. That's going to be this big on a daily chart. And that would start from here. So that would be your first leg up to get up to here. And if it breaks up above that, and this is all in the next month, right? You want to look at a daily chart. This is an every other day chart. This is a 2-day chart. But I would say in the next month, this is what you'd be looking for. You'd be looking for price to get up above there. And if price does get up above there, so it's going to get back to roughly 3,000. If it gets up above there, then I think we could be off for a good move.
Historically, the last 2 months of October have been extremely bullish. for Bitcoin, and where Bitcoin goes, the alts tend to follow the altcoins. So,
Yep. So that's from a chart, just from a strictly chart perspective. That's what it looks like to me, Ken. And you know, that's all I do anyway. I don't look at fundamental stuff. That's what I would say. If it breaks down below here, this is what you're in. You're in this wedge right now. It's really a triangle because the bottom is
BTC is in a
descending.
rising wedge pattern.
Okay, and this is a descending wedge. So you'll know in the next 2 weeks. You'll know whether it's going to go up or down from here. I mean, I know that's not really helpful to you, but it's not really giving you anything to work with right now because it's in such a tight spot right through here. Is that helpful at all?
Just like when they opened up the BTC ETFs, everybody thought, well, that's going to send it to the moon, but it had a negative impact. And now we've seen the same thing when they come out with the Ethereum ETFs. Initially a negative impact, and then it led to a new all-time high, and then it backed off again. I'm talking about BTC. So
yeah.
Anyway.
Yeah.
All right. So I'm here whenever you're done. No rush.
You can have it back now. You can take
no
it.
rush.
It's good. It's good. It's all good. So with that, we'll pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
You have to say the magic words.
I have to say it. It's like a button I have to press.
Okay.
Dwayne,
Now I'll say my magic words. Recap of the morning session.
Okay, and today it was not as easy as it normally is. Today it took 47 minutes and 11 trades to get to $1,700 with 10 contracts.
There we go. Good job.
There it is. Thank you.
All right, guys. We'll pick up where we left off, which is basically where we never got started. We have a new all-time historic high on the S&P 500 E-mini futures. Why do I always show the daily chart of the S&P 500 E-mini futures? Because the S&P tends to be bellwether, the guiding light. Sometimes the other indices, Russell, NQ, Dow, will get out ahead or lag behind. But ultimately, they're going to follow the leadership of the 500 large cap companies that comprise ES. So, just 2 days ago, we had a new all-time historic high. The previous all-time historic high was right here at 58.30. Then we got a new all-time historic high at 58.46 half. Now we have another all-time historic high at 58.66 and a quarter. Let's see how close we can get. Now you got to click it and make those little guys show up. Then you got to hover over it till it turns green. Now I forgot what the number was. 58.66 and a quarter. Hover till it turns. Nope. See, that white won't work. That'll move the whole thing. All you want to move is the top line. So let's give it a try. Oh my goodness. Did we get it right on the nose? That's like hitting the lottery. It's so hard to do that on the daily chart. Oh well. I guess that's what good living will do for you. All right. So we have a new all-time historic high. Red and falling has turned to blue and climbing. The step line is on the left side of blue and climbing, the black line. Okay. So this is the beginning of a perfect stack. Now, the 100% fib extension is up here at 60.13. Now, these fib extensions over here are your fib retracements. So now, because I just moved this, okay, the 24% fib retracement from the new all-time historic high is at 56.81. Here's the 38. Here's the 50. Here's the 62. The one line it doesn't move is this, if you do it the way I showed you. Okay. If you just use that, it'll move the whole thing and screw it all up. Do you see how the low didn't budge? Okay. All right. So what do we expect? Well, we know we got resistance at the high of the day. Now, I typically wait for price to get to the 100% fib extension before I change the fib extensions, and I'll give some thought to, because you see, right now we're going from this low to this high to this low. It's the same 14th century math as the retracements, just applied in a different manner. One is showing you where you should find support when the market starts dropping. This projects where you will find resistance as price starts climbing. Resistance at the 62, support at the 50. Now, I could, and I might, I'll think about it over the weekend. I could take the fib retracement tool, or the extension tool. That's this one. Here's your retracement tool. Every platform has them, okay? And they're free, so don't go spending money on fib tools. Click on this. I could connect this low to this high to this low. And I got a feeling I probably will do it maybe on the Monday broadcast. Not going to take the time to do it right now because we're running so far behind already. Okay. And of course, in doing so, that's going to push this 100%, way up. It's going to change all of these. It won't affect the retracements, but go from the low, from the most recent important low, most recent important high, to the retracement low, and then it projects these levels into the future. Okay. So as price drops, the retracement levels give you support, and as price moves higher, the extensions resistance, but then on a pullback, support. Okay. So this thing is at a point of looking so, when everybody says buy, that's probably when you should sell. And when everybody says sell, that's probably when you should be buying. That's how a lot of generational wealth was created. So, it's your life, your finances, your trading business, but this is looking quite a bit overextended. Now, the average daily range of the ES right now is at, let's see, this is the default look back period, 14 days. It's at 55.6. But I've added another one, and I've made the look back period 100 days. See that 100 pop up? Okay. So over the last 100 days, the average range of a daily candle, and remember, these trade around the clock, okay? From the low of the day to the high of the day, the average over the last 100 days is 65.6. You got some real big days in there, and you got some little days in there. That's why they call it the average true range. Okay. Do you need this? Is it important? You decide. You can have it. It's free. If you just want to stick to the simple, then that's fine. I just like knowing the average range is. And this is what the current daily volume is, 653,000, which is pretty light considering we put in a new all-time historic high. Yesterday we cracked 1 million. Day before we cracked 1 million. The day before we cracked a million, and the day before cracked a million. Okay. I mean, we still have time before the close today. Futures close at 5 p.m. Eastern. So we could still crack a million contracts traded, but I don't know. Looks a little iffy. Okay, and so how does that affect you? Well, the more participation there is in any given market, the better your chance for follow through and all of that. Just surprised to see this low a number. You'd think there'd be a huge number down here on a day where we put in a new all-time historic high. On this day, broke a million, and on this all-time historic high, September 26th, $1.2 million. So, I said all that to say this. If we put in a new all-time historic high on lower than normal volume, that is a very strong indication that price is about to take a dive. Now, I could go into a long, drawn-out explanation of why that is, but we're so far behind on time today. And why do we even look at a daily chart? Institutional traders are the ones who move price because of their account size, the size they trade in. So whether you trade futures or stocks or crypto or Forex or ETFs, if you'll train yourself to spend 2 minutes with the daily chart before you begin your trading session of whatever you're going to trade, and write down where major resistance is, where major support is, where the support is below that, you'll learn to glean a lot of information. It's not because you're going to trade the daily chart. Ask for the deep pockets. But you're getting a free look over the shoulder of the deep pockets that move price. That's a heck of a deal. Now, it looks like we're trying to push higher. But on light volume, anytime the market makes a significant move on light volume, you got to be very suspicious of that. And I'm just going to leave it at that for today. Okay. I'll do my normal long drawn out spiel on Monday, God willing. Now, just like you see on the smaller time frames, price does not travel in a straight line. Okay. Now this green candle, this red candle, it looks like price traveled in a straight line. But if you go to a smaller time frame, you'll see that it didn't. Leg retracement, leg retracement, leg retracement, leg retracement, leg. Until nobody's willing to pay one tick more. Now the pullback holds more often than not. This is the BBC, the green line, bull bear cross. Price gets above the green line, we're bullish, we expect higher prices. Price gets below the green line, we're bearish, we expect lower prices. Okay. So, even though the pullback holds more often than not, eventually it's going to trade through. Then it's going to start building legs the other direction. Until price drops so low that institutional buyers can't resist it, and then they come in and they do their thing. Now, this was one of the most powerful rallies I've seen in the history of the markets, or at least since I've been watching markets. After that rally, we consolidated for days, and then we had this deep pullback. That brings us to where we are right now. We're above the BBC. We have blue and climbing. Black step line is on the left side, blue and climbing. All indication that price should go higher. My concern is that we've made this very important move on light volume. The day's not out. Day is not out. We had a guest on the show many years ago, and I know many of you remember it. His name was Michael. He has a seat on the exchange. He trades 10,000 E-mini contracts a day. Not all at one time. And in fact, if you Google CFRN interview with Michael, he was on 3 or 4 times. In one of those interviews, you'll hear me ask him, "Hey, Michael, what do you consider a good day in the markets?" His answer blew me away. We're talking about an individual who's like his own institution. I was expecting him to give me a dollar figure. Oh, any day I make 50 grand or 100 grand or whatever. But his answer, and it's on that recording, and you can listen to it. And this guy was vetted. He's a friend of an old friend. And so it wasn't somebody thumping their chest. In fact, I kind of had to draw answers out of him because he didn't want to seem like a braggart or boastful. His answer to me was, "Dwayne, any day that I can net 2 points out of the S&P 500, that is a great day for me." I almost fell out of my chair because our Michael B, we've been teaching people that for years. Get 2 points, get your goal for the day, put the mouse away. And then we bring on this guy trading on average, 10,000 E-mini contracts a day. Again, not all at once. He's in, he's out. Let's face it, when you're trading 500 contracts or 200 or 300 contracts, a couple of ticks is a lot of money. So he's in and out, in and out, in and out. I mean, he's a super scalper, okay? But to hear him say 2 points when we're trying to teach people how to just go live with one contract, same goal, 2 points. And he said, any day I can take 2 points out of the S&P is a good day for me. Well, what he didn't say is there's some days I don't get 2 points, right? Okay. Doesn't mean he doesn't still make a lot of money. And I'm sure he has losing days too. Okay. But anyway, just Google CFRN interview with, what was it, Michael X. He didn't want to give out his last name. But again, he was vetted, and he does have a seat on the exchange. And that was, oh God, that was over a decade ago. But Michael, if you're out there listening, it's been a long time. Send me an email. All right, let's get through these. Go do our weekend. Vertical line separates today, Friday, from yesterday, Thursday. When price moves up to a weekly zone, we expect resistance until proven otherwise. When price drops to a weekly trading zone, we expect support until proven otherwise. When the market finds resistance, it will always go look for support. When it finds support, it will go look for resistance. When it finds resistance, it will go look for support. Over and over, again and again, it is a never-ending cycle. Okay? Now, all logic alerts and concierge trade alerts. Oh, I never did show you. I showed you the one, I didn't show you the other. Let me just show them to you real quick. All members, all trial members have access to both of these. Now, the concierge trade alerts are different. See, the logic alerts, they're to help you learn how to read the chart. These are where I anticipate price going. either here or here. We're going to walk through each market. If you're a member or trial member, read this information, write down your questions, book a mentoring session, or contact me through Telegram. Make sure you understand it. Okay. So on the ES, we had a long target of 58.39, a short target of 58.16. This came out last night at the beginning of the Friday session, Thursday night, 6 p.m. Eastern. So every member, every trial member had every one of these targets at the open last night. 58.39, 58.16. $58.39, $58.16. Now, again, the vertical line separates today, Friday, which began last night at 6 p.m. Eastern, 1800 hours. This was Thursday, zone to zone to zone to zone. Okay. So we opened above the BBC. Now, we didn't, on that first move, we didn't make it all the way to the target. However, you had everything in place. You're above the BBC, gap blue and climbing. This candle opened at 58.31 and it ran up to 58.37. So that one candle had 6 points in it. That's 3 days worth of your daily goal. Okay. A lot happens inside of a 30-minute candle. And so price ground to a halt here at a place I would not expect. Where did I expect it to grind to a halt? Here, right at that high. Now, with the logic alerts, as I've said several times and every day, on a weekly basis, 20% or less get stopped out. Why? Because 20% of the time, price doesn't do the next obvious thing. Okay? So the obvious thing when we opened last night above the BBC was for price to run at least to this high. Came a little short, but was still ample to give you your goal for the day. Price pulled back to the BBC, consolidated, blue and climbing, turned to red and falling. When that happens, quite often that's when price will trade through the BBC. Okay? So we got a leg and a retracement to red and falling. And the step line, that's resistance times 2. And what happened then? It sent us right down to the target, to the tick. What's the low of this candle? 58.15 and a quarter. What's the low of this candle? 58.16. It's this one. 16. Okay. So I set the target at 16. Little above the low of that candle. Because that's where I expected there to be support. And basically, that's where it was. See, it's not magic. Okay. Everybody wants to know the secret. The secret is learning how to read the chart and understand how price flows. Price has been flowing the same way since the inception of the markets, and it will continue to flow the same way until the market cease to exist. Why? Because that's how markets work. But why doesn't everybody else tell you that? Because they got a million different things to say. This course, that indicator, the other oscillator. Yeah. Michael and I got jerked around just like everybody else way back in the beginning. And we said, if we ever figured it out, that we would create a place where people could come and be treated with dignity, respect, like family, and actually learn how to trade, not just get taken to the cleaners or every time you have a bad day or a bad week, just sell them. Just go grab that indicator over there off the shelf, slap a new name on it, and sell them that. Okay. This is important. The step line has crossed blue and climbing. You'll notice blue and climbing is now directly above price. You should probably not expect price to exceed 58.62. Price may go up and test it. It might spike it. But because the step line has crossed, you see on the way up, that's so powerful. Price, step line, blue and climbing, BVC. Look at that move. Okay? That's what I call the perfect stack. But once the step line crosses blue and climbing, that's an indication that price is most likely going to retrace back to the BVC. Now, the pullback holds more often than not. So if it holds, then you'll be looking for opportunities on the long side. If this time it doesn't hold, well, then you'll be looking for opportunities on the short side. But right here, you got a bullish cross. That's where the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be the support. You see this bearish cross right here, where the red line got below the green line? See that? See that? Does it happen every time? No. Very few things happen 100% of the time. Does it happen a whole lot more often than it doesn't? Well, yeah. Ask any of our traders. So, now we know we got resistance here. Now, I'm not saying that buyers couldn't suddenly get real busy and push this thing higher, but everything we look at for clues as to what the market will do next. We don't know what the market's going to do next. Nobody does. No man, no machine, no algorithm, not nobody, not nowhere, not know how. It's not possible, okay? And I went into a long explanation the other day about some institutional trader getting indigestion and he got to go get Pepto and pulls a 100 contract order and the market freaks out because they don't know that that one guy in Berlin had indigestion. Okay, all right. See this candle turning red? Is this what we expect? Now, on the way down to the VVC, this low's potential support, this lowest potential support, this low's potential support. But based on many years of history, anticipate that price. Now, what if the price just goes sideways for a while and the BBC will rise to meet price? That creates a different dynamic than price dropping BBC or rising to the BBC. Okay? You may go up and touch it and then drop. And the reason I've explained all the reasons that I think the market that price may go lower. And while we're not volume profile people by any stretch of the imagination, I am again surprised that on the daily we have low volume after a all-time historic high. I'm not going to say that again. I've said it too many times already. Last night we opened right at the weekly trading zone. When price encounters a weekly trading zone, 70% of the time you're going to get consolidation. It can look like this. It can look like this. It can look like this. Okay. 20% of the time rejection, 10% of the time the slice. Here's a slice right here. Price sliced through the 30-minute, sliced through the zone on the 30-minute chart like it wasn't even there. But when it ran out of steam, see, this was a green candle all the way to the top. But when it ran out of steam, what did it do? It retraced back to the zone it sliced through and then continued in the direction of the slice. Now, probably won't see the highest weekly zone this week. And when we publish the zones on Monday morning, okay, that's kind of, it's giving you the playing field for the week. We're not saying price is going to make it to the highest zone or price is going to make it to the lowest zone. But 90 some percent of the time, price is going to close in each market inside the weekly zones. In other words, at or below the highest, or at or above the lowest zone. Okay. So as price came up here, consolidated 7% of the time, and we made that run, hit the long target, okay, traced back to the zone. Now, here's a great example, the step line cross, just like we saw in the ES. Price is now going up. It looks like to test blue and climbing, which is directly overhead. Now, I'm not saying that price can't trade through it, but I'm saying based on history and the tens of thousands of trades that we've observed and published and all the stuff, the highest, remember, this is a business based on probabilities. And if you're a new member, you need to read Trading in the Zone. It was written by my friend Mark Douglas. He's now passed. But if you don't already have an Audible account, you can go to audibletrial.com/CFRN. audibletrial.com/CFRN. You can get a free copy of Trading in the Zone. There's 2 books by that name. You want the one by Mark Douglas. The other one is worthless. Okay? Some hack, tried to whatever. Now, it's a free trial, and so they're giving you a free book to take a trial of Audible. Once you download your book, you can cancel your trial. They usually give you 2 weeks, a month, but if you're like me, you'll forget. And before you know it, you'll show a monthly chart. You'll see a monthly charge show up on your bank statement. Oh man, I meant to cancel that. Okay. Once you download the book, you can instantly go in and cancel your trial. The book is yours to keep forever. And it's a legal copy. Now, what do I mean by legal copy? Mark's widow still gets the royalty. Goldman & Sachs, on the other hand, every time they get a new employee, they photocopy. They have stacks and stacks of photocopies of Trading in the Zone. And each new employee gets one. Okay? There are no charts in there. There's no trade setups. So you're like, how could it even be a trading book? It's about the psychology of trading. Understanding that it's a business based on probabilities. Now, I struggled for a lot of years. So I was at the end of my rope. And probably 50 people had told me, you need to read Trading in the Zone. But my mindset was, well, what? There's no charts, there's no trade setups. I need something that I can make money with tomorrow. But I was literally at the end of my rope. And so I called Barnes & Noble and I said, do you have Trading in the Zone by Mark Douglas? He goes, yeah, I got one copy. I said, will you hold it for me? I'm going to race across town and get it. He goes, dude, it's been here for 5 years. I said, yeah, I know, but it's just my luck. He goes, okay, all right, I'll go get it. I came home and I read the entire book cover to cover on a Saturday. Now, the first part's a little dry. Jump to chapter 7. That will whet your appetite to absorb the entire book. You'll never look at trading the same again. I don't have enough words to convince you of that. Best I can do is offer you a free chance to get the audiobook. And I have the physical book, which I've read many times and reread, and the audiobook, which I've listened to and listened to and listened to. There are so many teachable moments in there. Chapter 7, that's the creme de la creme. I promise you, if you do this weekend what I did that weekend, you will be a different person and a different trader Monday morning. You will look at the markets completely different. It's up to you. I've never once had a trader, and we've had thousands over the years. I've never once had a trader tell me, hey, I read that Trading in the Zone book and it didn't help me. Look at that. This is an anomaly. This is something that typically doesn't happen. Now, what would be typical is, you see how we've poked through and we've taken out that high by just a little bit? We're always skeptical of just a little bit. If by the end of this 30-minute candle, which there's still 18 minutes left in the life of this candle, if that candle closes down towards the low, in other words, price has been rejected, then everything I've explained to you, it's right on track, okay? There is the potential price could just keep moving higher. Remember, very few things are 100% in the world of trading. That's why it's a business based on probabilities. You simply have to learn to put the probabilities in your favor, okay? Just trying to get through. Russell, what do we got? Russell opened right at a zone, consolidated for hours, but red and falling, okay? As it's consolidating and you see blue and climbing turn to red and falling, then you start ready. You want to get your short pants on, okay? This candle right here opened at 2203.70 and dropped to 2201.80. One tick shy of 2 points. But you got the rest of it in this candle. This candle opened at 2201.90 and dropped to 2199.90. Exactly 2 points. But remember, price doesn't travel in a straight line. Leg, retracement, leg. This candle opened at 2201.70 and dropped all the way to 2195.20. Leg, retracement, leg. Okay. Now, see this low right here? That's the short target. Could price have continued lower? Any of these areas it could. But I just want to give you enough room to, be able to get your goal for the day. In several different ways, the logic alerts, the concierge trade alerts. Really what you want to do is you want to learn to read the chart. You want to watch closely what Michael does in the morning and ask lots of questions. Because you don't want to be dependent on us for the rest of your life. You want to become an independent, self-sufficient trader. And that's what we want for you. And then, to whom much is given, much is required. Then we want you to stick around and help the new guy, the new kid on the block. All right, so from here, this was that 8:30 news announcement. Shot us up through the target. But then look where we ended up. This is so common with econ reports, okay? And this is why we don't recommend trading news. Price ran way up here. But by the time the 30-minute candle was finished, price was right back where it was when the report came out. So then you get a little doji here, indecision. See that? Okay. Then here comes a 9:30 open, which is typically the largest candle of the session. Not always, but typically. Yesterday, the biggest candle was the 8:30 news candle. Today, it was the 9:30 opening candle. I don't do anything during the first 30 minutes. I don't put out alerts. I don't put on trades. Volatility is necessary to be a trader, but I need volatility that I can manage. I'm not as fast as Michael. And the good news is I don't have to be. I can wait until the 9:30 open comes, and then maybe there's 10 o'clock news, and by 10:15, 10:20, the markets are settled down, gotten back to their normal rhythm, and then that's when, remember, you only need one good trade a day, so you don't have to rush it. Some people have to rush it because they got to get to their day job and that kind of thing. I understand that makes it a little tougher, but the good thing about futures is they trade around the clock. So if you got to go to work early in the morning, you can get your goal at night. The ES, crude, and gold are liquid around the clock. There is a 1-hour break each day from 5 p.m. to 6 p.m. Now, the markets will be closed, of course, tomorrow, but they'll open Sunday night at 6 p.m. Eastern. Today officially kicked off earnings season. With stocks, you see gaps ups and gaps down almost every day. American traders stop trading stocks every day at 4 p.m. Eastern because that's when the market closes. But at 8 p.m. Eastern, the Asian market opens. And they're trading Tesla, they're trading IBM, they're trading Apple. But it's not reflecting on your charts because you're in America and your charts are still. And then the London Open comes along at 3 a.m. Eastern. And they start trading stocks. And so the reason you see that gap on a stock chart almost every day is it reflects what happened during the overnight session that you didn't have access to. Just as if you were living in one of those countries, you wouldn't have access to the U.S. markets. Anyway, step line is crossed. We're at a zone. Consolidation, 70% of the time. Blue and climbing is directly above price. What do we expect? Price to retrace back to the BC. So in Q, we opened right at the zone, consolidated for hours, blue and climbing turned to red and falling, and where do we go? Right at the target. Where's the target based off of? Here. This candle opened at 24.15 and dropped to 371. That's 30. That's 45 points at $20 a point. That's $900 per contract traded in that candle. See why I like these larger time frames? I still execute off a smaller time frame. So we consolidate along this target, make a little dip lower, trying to get to that low right there, but we couldn't make it. The zone held it up. Now remember, these are the zones that came out Monday morning at 6:15 a.m. Eastern. zone. Now, the alerts that go out Sunday night will be based on these zones. The new zones will come out Monday morning at 6:15 a.m. Eastern. And every alert after that will be based on next week's zones. So we find support. What's the market going to do? Resistance. Market encounters a zone. What happens 70% of the time? Consolidation. Consolidation. That's rejection. That's rejection. Okay. So, obviously, this long target, it's right there. All right. Crude oil. Here's where we open. Ran up to red and falling, which is bearish. That pushed us down to the BBC. We overcame it for a little bit. Now look at this high. And it lines right up with that high put in earlier in the session last night. Then we dropped below the zone, got red and falling, and where does it take us? Right down to the short target. That low right there, see that? Support always sends the market to resistance, back to support, back to resistance, back to support, back to resistance. This is just consolidation 70% of the time. This launch here, we opened at 75.75 and ran up $250 contract traded, and then we came back down and we consolidated. This is sort of a snarly mess. I wouldn't want to be. What I would trade is if price can get up to 75.90, trade it up to 76 bucks, go for the day. You're above the BBC, you got blue and climbing, you just gotta take out this high. Now that high is 75.81. That doesn't mean you jump in at 75.82. You got to make the market prove itself. I would want to get to at least 75.90 and then trade it up to 76. Very, very conservative. Gold. Here's where gold opened last night, well above the BBC. So we instinctively expect higher prices. So we get a leg, retracement, a leg, at the target. Now this candle here, opened at 49.7, ran up to 53.2. So for simple math, we'll call it $300 per contract traded. There's more than that in that 130-minute candle. So we hit the target and we trade through the zone. Now the zone is 2655/56. The low of this candle is 56. So we sliced and then came back to the zone we sliced through and continued in the direction of the slice. Right here, the step line crossed, blue and climbing. See the black line? It's on the left side on the way up. But once it crosses, and look what price did. It went up and it tested blue and climbing. And then what happened? We dropped back to the zone and the BBC, both of which we expect to be good support until proven otherwise. Support bounced us into resistance at red and falling. Resistance sent us down to support, the long target, the top of the long target, basically the zone. Okay. Then from support, get a leg. Hang on 1 minute. Okay, step lines crossed. Where's price heading? This is support times 2. When price drops to the VVC, we know the pullback holds more often than not. When price drops to a zone, we expect it to be support until proven otherwise. That's why I call it support times 2. There was never any reason to even think about the short target because we never got below the BBC. You might say, oh, well, you did right here. Yeah, but every candle is touching it. So the pullback holds. So you have a candle open and close that doesn't touch it. So we could sit here and wait for this to drop. Might get a little support right here at this low. Maybe you get a little bounce. Ultimately, that's where we're headed. Now, from a 30-minute perspective, that would be a counter trend trade. Every logic alert is a trend trade as defined by the 30-minute chart, price, and the BBC. If price is above the BBC, I'm only going to put out long alerts. If price is below BBC, I'm only going to put out short alerts. And there will be occasions where I'll put out both a long and a short because we're at a situation where price could go either way. Okay? And I'll get into that in more detail with you as you get to the point where you actually have an interest in that kind of information. Guys, this is all big picture stuff. Do you have to learn all of this? Nope. If you simply learn what you're taught in the live training room each day, you can make your goal for the day. What I do just puts it all in context. See, I don't trade every setup on the 7-tick range. I only trade a 7-tick range setup that complies with what I'm being told by my 30-minute roadmap. Right now, if my 7-tick range was telling me that I had a long setup, I would never take it. Because I'm firmly convinced that price is going to drop. It's called using multiple time frames. It'll take a little while for your brain to adjust to thinking in multiple time frames. But that's okay. You're building a business where you have no employees, no inventory, and very few of the headaches associated with owning a traditional type business. We've just got a new candle. Now, when you get a new candle, like we just did, most of the time, not all the time, most of the time, it will continue doing what the previous candle was doing. So do I expect this candle to continue dropping? Well, it's red, right? Okay, I gotta run. Silver. Here's where we open. Ran up to the target, pulled back to the VBC, ran up to the target, ran up to the zone, and we've been consolidating at the zone now for quite a few hours. The step line has crossed, and so we expect price to retrace to the BTC. Every market exactly the same. The euro has been asleep for basically all week. I mean, we go from zone to zone, from zone to zone, and then back to the zone, and then back to the zone. We've done that, but it's been a real snoozer. I don't think we have a lot of people that trade the euro. I may just remove it from the syllabus. In fact, if there's anybody out there that really uses the euro, then type it in. Don't type it in right now. Type it into the discussion group, and I'll keep doing it for you. Okay? All right. One last look at the daily. Okay, we're back up to the high of the day. No, almost. High of the day is 58.44. No, that's not right. 66.25, and we're at 60. So we're about 6 points. About 6 points off the high of the session. Okay, the new all-time historic high. I'd like to say volume's really picked up. You don't hear me talk about volume much, but it's on days like this that I do think about it. Now, you may have heard this in the world if you used to be a stock trader. Higher highs on low volume, you better get out of the way because that sucker about to fall. We'll see. I can guarantee you this 100%. I'll either be right or I'll be wrong. Guarantee. All right. Quit messing around. Become a member. mytradingiq.com. Got questions? Call us. Email us. 9 out of 10 of you are going to fail unless you find a teacher somewhere. Futures Magazine wrote this article back in 2006, and they say it's only gotten worse. I don't see how you can get much worse than 9 out of 10, but their article did not explain why. So it became my personal mission because I was one of them. It became my personal mission to find out why. Just because nobody had a teacher. I put out a hefty cash bounty for somebody to take me by the hand, let me sharpen the pencils, make the coffee, and teach me how to trade. Not one taker. I'm not giving away my secrets. Oh boy, here we go. So anyway, I guess it's a good thing for you guys. Because had I found a teacher way back then, we probably wouldn't be having this conversation today, would we? As a passport holder, you get 2 hours of live training every trading day, plus private one-on-one mentoring. The strategy and the indicators are fluid across all markets, all time frames. You get the Logic 247 alerts around the clock. You get the concierge trade alerts every night when they're published. You get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you get to attend the members only workshop every Thursday night, 8 p.m. Eastern. And you get the key to the vault where we've archived all or a whole lot of the previous workshops. Do you need to go watch them all? No. If you're looking for something to do, you can. Just show up every day. Ask questions. And that's the quickest way to catch on and to get profitable. Not wading through this museum we've created of stuff. Because we record everything we do. Because we're transparent. And if anybody ever calls us on anything at any point, at any time, we got it. It's right there. It's in the public domain. Go have a look. So anyway, everything a trader needs, all under one roof, one low price. Let's wrap it up with our good word for the day. You say. They say yes. Today, God is calling you, part 3. I have prayed for you that your faith will not fail. Luke 22:32. God wants you to do His will, but you'll never reach the place of spiritual maturity in which you're free of Satan. You can overcome him, but you can't eliminate him. Look at Peter. He only had one gear, overdrive. He was always in the middle of everything that was going on, but he wasn't always on top of things. The man who ended up leading the church first denied being a disciple of Jesus. It's shocking, right? But nothing about us surprises God. He doesn't call you and say, I hope you're the right person. No, Jesus told Peter, Satan has demanded to sift you like wheat, but I have prayed for you that your faith will not fail. 22:31. Now that's a pretty amazing revelation. Even when you don't know how to pray for yourself, Jesus is praying for you. He ever lives to make intercession for them. Hebrews 7:25. Jesus told Peter in Luke 22:32, when you have turned back, strengthen your brothers. Out of the mess you're in today can come a ministry to others. Not only can God turn your life around, He can use you to turn the lives of others around too. And one more thing. God isn't apt to think you're worth sifting if you aren't doing something right in the first place. Sifting is a method of purifying, of straining out the debris and refining what remains. That means there had to be something worth salvaging in you at the outset. Today, God is calling you. Don't waste another moment. Surrender your life to Him. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.